AMD, NVIDIA, Supermicro also seeing steep losses. But my next guest sees a bullish signal for some of those names in the options market. So joining me now is Chris Murphy, co-head of derivative strategy at Susquehanna. Chris, it's great to have you on. What's the bullish signal? Where are you seeing it?
Well, so, clearly people are selling out of some of those high momentum names. We've seen the price action. But in the options market, it's been mostly the different story where, we're going to pull out of these names as they pull back, but we want to be long in the options market. So one example would be in Palantir yesterday, December 100 put seller, pretty big, 20,000 times. They're basically saying if this sell-off continues, I would be happy to buy Palantir at this much lower level. And we're seeing that across the board. Let's take a time out from being long these stocks. They are crowded. There is some momentum unwind going on right now. Let's instead set up bullish positions in the options, willing to buy the dip. Or we're also seeing call buyers that are saying, if this thing snaps back faster than I can buy these stocks back, I want to be involved via calls.
Interesting. I mean, how much of this is also just the trading activity we're seeing tied to the technicals versus the fundamentals? I know a lot of folks have been pointing to the OpenAI, Sam Altman AI bubble comments, which arguably were taken a little bit out of context, and also this MIT study finding that only 5% of projects are profitable right now. But I also realize we've got seasonals at play, you got certain levels and big run-ups at play. I guess, what are you seeing?
Absolutely. I mean, we're seeing more hedging on the macro level than we've seen in a while for all of those reasons that you just discussed. Take something like ARK. That would be a, clearly in the crowded tech wheelhouse. We're seeing very consistent near-term put and put spread buyers trying to play that seasonality, but still wanting to be involved in these names if they do rally back. So closing out of the positions, getting involved in upside calls in the individual names, and then on the macro level, we're definitely seeing a lot more hedging into this seasonably weak period. A lot of different catalysts coming up, as you guys have been discussing. That's kind of the landscape in the options.
You say there's some bullish flows that continue despite the hedging. Where?
For example, a name like Riot, we've seen consistent call buying. It's a little bit out along the calendar, more in December, and that's where a lot of the action is. Another one, not necessarily tech related, is CPRI. Let's sit out the near-term turbulence. Let's close out of these names, our underlying positions, but let's have medium-term option positions on for when this kind of storm and dust settles, and later on this year, we still want to be long these names.
Okay. Let's take a trip around the world. Japanese bond yields, multi-decade highs. You're seeing some action tied to that, too.
Yeah, it's kind of interesting. EWJ is the Japanese ETF. Volatility there is on the lower end. But just recently, we've seen a fair amount of volatility buying. Some of it's call buying, some of it's protection. But the general idea is, we've seen this movie last year when, things got it started to unwind a bit in the yen carry trade, things like that. This is a very low volatility vehicle to position for the smaller chance of some sort of unwind happening. And we're seeing some investors taking a shot on that.
Yeah, we tend to see these types of activities, to your point, including that yen carry trade unwind last year. They happen in August, so we're on high alert.
Yep.
Finally, just what are you seeing in terms of positioning going into Fed Chair Powell's presentation at Jackson Hole tomorrow? And I guess how does it speak to more broadly what you're seeing with the major averages?
Well, some of these fixed income ETFs are great vehicles to see, opinions there, whether it's the TLT, which trades a lot, HYG. We're seeing put buying in both of those. But what just popped up today is ticker SHY. That's the near-term Treasury ETF. And we saw around 60,000 puts bought. So you're looking for maybe a disappointment from Powell at Jackson Hole, inflation data to continue to be a little bit sticky, maybe not getting a cut in September. We don't really see that one trade very much. So when we see a big put buyer, it's the September 82 puts, that's really going to draw our attention because, someone put a lot of thought into doing a trade that large.